Hello viewers, welcome to my channel Profitable Trading. Today I have brought another exclusive content. Now in this video I'll be covering all the aspects of trading. Firstly, and very important topic, identifying the trend. Without knowing the actual trend, any strategies that you apply, you will not be able to become consistent and a profitable trader. Hence, I'm including the very important topic, and I'll also talk about what should be the entry levels, what should be a stop loss, and also the profit level. So I'll be covering everything that you need to know to enter into a trade and exit the trade with the profit. Towards the end, I'll be showing you a couple of entries that will be of a risk and reward ratio of 1:3 and 1:4. So exciting content towards the end. So stick to the content uh, and understand and get the successful setup for your trading. I do a 9 to 5 job, and out of my passion I create these videos so I can assist everybody out there who's trying to learn trading and make a passive income for themselves, right? Because when I started searching for educative content, when I was interested in learning trading, I couldn't find anything that helped me to become a consistent and a profitable trader. Hence, I want really people to avoid losses with their hard-earned money and kind of learn the actual trading. So this is mentorship content anybody gets when they sign up for mentorship. But on my channel, I'm absolutely offering this for free. So stick towards till the end of the video and learn the greatest content, and that will help you to become a profitable trader. In the end, if you like the content, please give it a like and subscribe to my channel so you get connected and notified whenever I add new content to assist you to learn trading better. So without any delay, let's get into the content here in a minute. Let me switch the screens. So the first thing that we'll do is get into a daily chart, because a daily chart is where you can find the actual trend. Once we know the trend, we'll try to trade in the direction of the trend. So I go on a daily chart and I switch to a line chart to make it easy for me to visually know what is the trend. So I'm looking at GBP/USD. I'm just going back to the time when the chart and the data exists. So what I see is there was an uptrend, right? And then it is got into a downtrend. The reason why I say this is downtrend is because I see price making constantly lower lows, right? So the basic structure of the market for a downtrend is something like this, right? When we say it's in downtrend, which you might know, or you can make a note, this is how a downtrend will look like, right? Hence I'm saying uh, this is a downtrend. Okay, so now let's get into some more understanding of how to avoid a counter trend. Now when you see price making a lower low here, okay, it is bound to make another lower low. Okay, that's how the market works. So the 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 junction, right, or the area where the market breaks the previous lower low is very important. We'll also get into 15 minutes to get into the entries, but this is where all the action happens in any time frame. This is the market structure method. Okay, so here is another lower low and this is another lower low. Now you might ask this question, right? If you see downtrend for these many days or months in a downtrend, why not get into a pullback, which is again gone for many months? The reason why the professional traders don't get into a counter trend is because the length of this pullback, we call this as pullback or correction, is not defined. It could be smaller at times and it could be lengthier. So if I try to use, I could demonstrate that. Let me try to use the Fibonacci. If you try plotting Fibonacci, right, you can see that this was a downtrend, right? This is a down move, and price kept on touching the 38 and 50, and then it ran back into the downtrend. Okay, and whereas if you apply a Fibonacci for another move, right, down the move, and see how much was the pullback or the retracement, you can see that it would have been different. Now in this move, right, in this down move, this whole down move, price only touched 38 and went back again in the downtrend and made another lower low. So this differs. So you really cannot be assured of how much retracement or the pullback a counter trend will occur into. So always avoid getting into counter trend if you're really interested to trend in the counter trend. I have added a link to my description here that should help you understand how to trade a counter trend. Let's get into the actual content here. Now, when do you know that the counter trend or the pullback is getting over and the price is ready to resume back in the downtrend? Let's now, once we know the overall trend, let's get into the candlestick chart, right? So the way to find and look for the trend resuming is, now this is the lower low, right? From lower low, the price goes in the opposite direction, right? A lot of green candles, price moving in the opposite direction. So what you do is you look for a structure change. Okay, now this is a typical uptrend, right? So this is a typical uptrend. What you do is you wait for a structural change, which is price making higher high, breaking the previous low, and again attempting to go up but doesn't go up and changes its direction. So this is a shift in the direction, right? It was uptrend and it has started a downtrend. So you have to look for this structural change, because since we know that GBP USD is on an uptrend overall, right? And we want to get into the downtrend. Overall trend of the market is downtrend. So we wait for the structure to change on the correction to align with the master trend, which is the downtrend. Now, when we see this whole correction or pullback changing its structure, right, and actually doing the downtrend structure, now that's a hint that market is now ready to go back into its master trend, which is the downtrend. And that is what is happening. If you see closely here, right, there was a higher high and then the price did not make a higher high, then it stopped and started breaking the previous higher low here, somewhere here, right? Let's do a small mapping here, right? So it has broken the previous higher low and price has gone down, and then price went above this area, right, which we saw. This very important, right? The price move that breaks the previous higher low of this uptrend structure, right? You can mark this whole move is very powerful. And now what we see is price going above this price move and coming back. So now this indicates that market has started going in the downtrend direction. Now when you get this kind of confirmation, you can go back. Let's see, it's somewhere around 2nd of September. I've stopped the chart. Now it's a good time to go into a 15-minute chart around the same date. Let's try some entries. 2nd of September, right? So this is first, right? When we go in 15 minutes, it looks like, as we saw, the downtrend has already started and we're looking at a 15-minute chart. Now we'll try to get into some entries here to see how it works, right? To really get into the actual entries. So now let's do some mapping or markings here. What we see is price making a lower low here, right? And then going up, making another lower low by breaking this previous lower low. So this is very important, right? I've been talking about this. Now we'll wait for price and let's also kind of get ready to take up a trade. The location, right, area where around the price breaks the previous lower low, right? Let me just label this for better understanding. Lower low is very important. It's very strong area for selling. So we'll mark this. No, does not have any predefined length, but let's get into action here. Let's see how price reacts. If it touches this area and returns in the down direction, right, we'll get into an entry. Let's speed this up a little bit. It's trying to go back. It's very close to our zone of sell, right? Let's see. Yeah, it does. Yeah, it does touch and react, right? We could just slow it down just to see if there's any momentum coming out of that zone. We can see that, right? Price moving down, getting into the zone. Yes, we see a good momentum. So let's get into an entry, a short entry, a sell entry here, right here, with this stop loss around this zone. This zone is approximation, right? There's no predefined, but kind of just have this in mind that use a kind of a rough estimate on this, something like this, and your profit will be the last point where price again started going in the opposite direction, or the point where it started another pullback. Okay, so let's see what really happens. We expect the price to come down and hit this low. Let's speed this up a little bit so we can cover more entries. Okay, it's a bit slow, but yes, it hit the target. Okay, so this was the previous low. It made another lower low here, right? This is where price moved in the opposite direction. So this is our minimum profit where we expect the price to come down. Okay, you can definitely expect a little more, because when you see, so the good question that you might come up with is, how do you expect the price to go beyond this lower low? So if you see a difference of this lower low and this lower low, there's a good amount of distance, right? Have this in mind. When the lower low are really apart, right, from the previous one, it means that market will make another great lower low. So what you can do is you can trial the stop loss, right, move the stop loss in the direction of the profit and expect the price to make another lower low. You'll have this as your bare minimum profit. Okay, lock your profits and let the price do its magic. Let's see what happens. See, almost 1:4 target is what we're looking at here, right? Nice. So this was really a nice trade. I hope you liked it. Now, since price has made enough of its lower low, right, distance, you see something of the same sort. Now let's exit out of the trade, mark another lower low because price has started moving in the opposite direction. Okay, and let's do the important part to hunt for the next entry, which is marking this structure break, right? The point where the previous lower low was broken on the left, right? And so we can get ready for the next entry. So this is where we'll mark the zone for sell, and we'll wait for another magic to happen, which is wait for the market to touch the zone. Let's see what happens. So it does touch the zone, right? Let's see if it reacts. Quite quick, quite quick. We should have been um, quite quick here. So this is where our entry would ideally be. This is a stop loss, and the risk and reward is a little less to the bare minimum level, right? But we can expect the profit to go a little beyond, and then see if that hits, because we are seeing a deep lower lows being created, right? So let's see where does this go. Price is again touching the zone, again trying to come back. So let's wait for a while and let's see the magic here. Yes, price coming back in the direction of our trade. Pretty much slow, but yes, it's trying. Yes, yes, yes. We just have to give it some time, guys. We're looking at a 15-minute chart, right? So it does take time for price to look at that. It's much more than what we expected. another 1:2, right? We can slow down and see to what level does it uh, really go, right? We can move the stop loss into profit, right? Lock our profits and do a trailing so we can actually maximize the profits. We've already got 1:2. We can just wait and watch to see if we could maximize our profits from here, right? We could move our stop losses around this location and see if price moves further down and see if we could make some big profits, just compounding some profits, right, from what we have already got on this trade. Let's see if it moves down, right? It does. Yeah, this is a very good habit, guys. If you have the this technique of, or the mentality of locking your profits at certain zone and letting it play for another hour or so, you can actually see your profits getting compounded. At times market just speeds into one direction, so that's a really good psychology that a lot of good professional traders do, right? See, look at that. You actually don't need to wait for another entry. This is another compounding profit that you're already making on top of 1:2. So you're actually doubling your profit, right? Now just take a look at where you started, right? You started here, and just because you're doing a trailing on a stop loss, you've already made around 1:4 profit, right? So this is the art of trailing stop loss and maximizing your profits. I hope you liked the content and this will help you to you know get these sniper entries by understanding the market structure concept, mainly when you know the trend, right? The reason why it looks really nice and our trades going well is because we are trading in the direction of the trend. This is the magic of knowing the trend and then trading in that direction. Even if you do this by identifying the trend, you will also be able to get these kind of entries only when you know the trend. I hope you like the content and this content has helped you. Uh, Consider hitting a like button and subscribing to my channel, and sharing this with your friends who want to learn trading. Uh, until the next video, take care. Bye bye.